Stephanie, a 24-year-old dental hygienist, was shopping for her first car when she encountered a dealership that would test her knowledge of legitimate financing and teach her valuable lessons about auto loan fraud targeting young buyers. She visited a lot advertising guaranteed approval, no credit check needed, which seemed perfect for her limited credit history. Stephanie had been saving for a reliable used car to replace her aging vehicle that was becoming increasingly expensive to maintain. As a recent dental hygiene graduate, she had steady employment but limited credit history, making her concerned about loan approval. The dealership, called Easy Credit Auto Sales, had multiple vehicles in her price range and sales staff who immediately assured her that financing would not be a problem regardless of her credit situation or employment history. The salesperson, who identified himself as Finance Manager Rodriguez, showed Stephanie a 3-year-old sedan priced at $18,500 and immediately began discussing financing options without reviewing her credit or income information. Ms. Patterson, this vehicle is perfect for healthcare professionals like yourself, and we can get you approved for financing today with payments as low as $275 per month, Rodriguez said with apparent financing authority and payment calculation expertise. Our special financing program works with people who have limited credit history and guarantees approval for reliable borrowers with steady employment. Rodriguez explained that the dealership worked with specialty lenders who focused on helping young professionals establish credit through auto loans, and that Stephanie's employment in healthcare made her an ideal candidate for their financing program. Ms. Patterson, healthcare workers are considered excellent credit risks because of job stability and professional income potential. Rodriguez continued with apparent industry knowledge and professional borrower expertise. Our lenders specifically look for healthcare professionals like dental hygienists because they know these careers provide reliable income and responsible borrowers. Rodriguez prepared financing paperwork showing monthly payments of $275 for 72 months at 8.9% interest, which seemed reasonable to Stephanie based on her research of auto loan rates for borrowers with limited credit. However, when Stephanie read the financing contract carefully, she discovered that the actual interest rate was 24.9% and that the $275 payment was calculated over 84 months, not the 72 months Rodriguez had mentioned verbally. The interest rate and loan term on this contract are different from what you told me, Stephanie explained to Rodriguez. The rate is 24.9% for 84 months. Not 8.9% for 72 months like we discussed. Rodriguez became dismissive when Stephanie questioned the contract terms, claiming that the higher rate and longer term were necessary due to her limited credit history and that the terms were actually favorable for someone in her credit situation. Ms. Patterson, first-time borrowers with limited credit always receive higher rates initially, but you can refinance to better terms after establishing payment history, Rodriguez insisted with apparent credit improvement knowledge and refinancing options. The 24.9% rate is actually competitive for borrowers in your credit category, and the 84-month term keeps your payments affordable while you build credit. Rodriguez also claimed that the dealership's financing was Stephanie's best option because traditional banks wouldn't approve her for auto loans with her limited credit history and short employment period. Stephanie felt pressured by Rodriguez's claims about limited options, but decided to leave and research auto financing independently before signing any contracts with terms different from their verbal discussion. Stephanie contacted her bank to inquire about auto loan pre-approval and learned that she qualified for a loan at 12.9% interest for 60 months, which was significantly better than the dealership's 24.9% rate and shorter loan term. Stephanie also researched the vehicle's value and discovered that the $18,500 asking price was approximately $3,000 higher than the car's actual market value based on its age, mileage, and condition. Stephanie realized that Easy Credit Auto Sales was using predatory lending practices by charging excessive interest rates and inflating vehicle prices to take advantage of buyers with limited credit knowledge. Stephanie contacted other dealerships and found the same vehicle model at a reputable dealer for $15,200, which she was able to finance through her bank's pre-approved loan at much better terms. Stephanie reported the predatory lending practices to her state's Attorney General office and the Consumer Financial Protection Bureau. She learned that dealership financing scams often target young buyers by claiming special programs while offering predatory terms. The authorities explained that legitimate auto financing involves transparent disclosure of all loan terms, and that borrowers should always compare dealership financing with bank and credit union options before signing contracts. Stephanie learned that car buyers should obtain financing pre-approval from banks or credit unions before visiting dealerships, and should be suspicious of dealers claiming guaranteed approval without credit checks. The experience taught Stephanie to research vehicle values independently and to carefully review all financing contracts to ensure terms match verbal agreements before signing any auto loan documents. Stephanie now educates other healthcare workers about auto loan fraud and emphasizes the importance of obtaining independent financing pre-approval and researching vehicle values before visiting dealerships claiming special financing programs. Marcus, a 29-year-old construction worker, needed to replace his work truck when he encountered a lender that would test his understanding of legitimate lending practices and teach him valuable lessons about title loan fraud targeting working individuals. He responded to advertisements for quick vehicle loans using his truck as collateral. Marcus owned a pickup truck worth approximately $12,000, but needed immediate cash to cover emergency medical expenses while maintaining transportation for his construction job, making title loans seem like a potential solution for his financial needs. The advertisement he saw promised fast cash using your vehicle as collateral. Keep driving while you pay. No credit check required, which seemed ideal for his situation since he needed money quickly but couldn't afford to lose his truck. Marcus visited Quick Cash Title Loans and spoke with loan specialist Williams, who immediately assured him that he could borrow against his truck's value while continuing to use the vehicle for work transportation. Mr. Garcia, your truck is worth $12,000, and we can provide you with a $6,000 loan today using your vehicle as collateral, Williams said with apparent vehicle valuation knowledge and immediate lending authority. You keep your truck and keys, make monthly payments, and maintain full use of your vehicle while paying off the loan over 12 months. Williams explained that title loans were designed for working people who needed emergency cash but couldn't afford to lose their vehicles, making them perfect for construction workers who depended on trucks for employment. Mr. Garcia, title loans are specifically designed for people like construction workers who need their vehicles for work but also need access to emergency cash. Williams continued with apparent worker-focused lending expertise and employment understanding. You can borrow against your truck's equity while maintaining full access to your vehicle for work transportation and personal use. Williams prepared loan documents showing monthly payments of $650 for 12 months at what appeared to be 15% annual interest, which seemed manageable based on Marcus's monthly income from construction work. However, when Marcus read the loan contract carefully, he discovered that the 15% rate was actually a monthly rate, not annual, making the actual annual percentage rate approximately 180% plus additional fees. This contract shows 15% monthly interest, which would be 180% annually, Marcus explained to Williams. That seems extremely high for a secured loan using my truck as collateral. Williams became evasive when Marcus questioned the interest rate, claiming that title loans always carried higher rates due to the fast approval process and that the rate was competitive for emergency lending services. Mr. Garcia, title loans are emergency lending products that provide immediate cash access, so they carry higher rates than traditional bank loans. Williams insisted with apparent emergency lending justification and rate explanation knowledge. The 15% monthly rate is standard for title loans and reflects the convenience and speed of approval that allows you to get cash today instead of waiting weeks for bank approval. Williams also claimed that Marcus could pay off the loan early without penalties and that the high rate was only temporary for the convenience of immediate cash access. Marcus felt concerned about the extremely high interest rate, but was pressured by his immediate need for emergency funds and Williams's claims about standard title loan rates. Marcus decided to research title loan rates and alternatives before signing the contract with such high interest costs that could make the loan difficult to repay. Marcus contacted his bank to inquire about personal loans or lines of credit and learned that he could qualify for a personal loan at 18% annual interest, which was significantly lower than the title loan's 180% rate. Marcus also researched title loan regulations and discovered that many states had laws limiting title loan interest rates, and that 180% annual rates were considered predatory lending in most jurisdictions. Marcus realized that quick cash title loans was using predatory lending practices by charging excessive interest rates that could trap borrowers in cycles of debt and potentially lead to vehicle repossession. Marcus contacted a credit union about emergency loan options and was able to obtain a personal loan at 16% annual interest that met his emergency funding needs without risking his truck or paying predatory interest rates. Marcus reported the predatory title lending to his state's financial regulatory agency and the Consumer Financial Protection Bureau. He learned that title loan scams often target working individuals with immediate cash needs by advertising convenient approval while hiding excessive interest costs. The authorities explained that legitimate emergency lending involves reasonable interest rates and clear disclosure of all costs, and that borrowers should explore all alternatives before considering high-cost title loans. Marcus learned that emergency funding needs should be addressed through banks, credit unions, or other legitimate lenders rather than title loan companies that charge predatory interest rates. The experience taught Marcus to calculate annual percentage rates carefully and to explore multiple lending options before accepting high-cost loans that could create more financial problems than they solve. Marcus now educates other construction workers about title loan fraud and emphasizes the importance of researching loan costs and alternatives before using vehicles as collateral for emergency lending. Jennifer, a 32-year-old office manager, was refinancing her auto loan when she encountered a company that would test her knowledge of legitimate refinancing and teach her valuable lessons about auto refinancing scams targeting borrowers seeking better rates. She received a call claiming she pre-qualified for significant rate reduction. Jennifer had an auto loan at 16% interest from when she had poor credit 2 years earlier, and her improved credit score made her interested in refinancing to reduce her monthly payments and total interest costs. The caller, who identified himself as Refinance Specialist Davis, claimed to be from National Auto Refinance Services and offered immediate rate reduction to 4.9% that could save Jennifer over $200 per month on her car payments. Ms. Lopez, our records show that you qualify for immediate auto loan refinancing that can reduce your current 16% rate to 4.9% and lower your monthly payments from $485 to $275. Davis said with apparent refinancing authority and payment calculation expertise. Your improved credit profile makes you eligible for our premium refinancing program that provides maximum rate reduction for qualifying borrowers. Davis explained that auto refinancing could provide immediate payment relief and that Jennifer's credit improvement over the past 2 years made her an ideal candidate for significant rate reduction through their specialized refinancing program. Ms. Lopez, borrowers who have improved their credit since obtaining their original auto loans often qualify for dramatic rate reductions through specialized refinancing programs. Davis continued with apparent credit improvement knowledge and refinancing benefits expertise. Your credit score improvement makes you eligible for our lowest rates and maximum monthly payment savings. Davis offered to process Jennifer's refinancing application immediately for a processing fee of $395 and promised that her new loan would be approved and funding would be available within 48 hours. Jennifer was interested in reducing her payments, but was suspicious about paying a processing fee for loan refinancing, since she believed that legitimate lenders made money from loan interest rather than upfront fees. I'm interested in refinancing, but I don't understand why there would be a processing fee since lenders typically make money from loan interest, Jennifer explained to Davis. Can you explain why National Auto Refinance Services charges processing fees for refinancing applications? Davis became evasive when Jennifer questioned the processing fee, claiming that refinancing services required specialized underwriting and that the fee covered administrative costs for processing applications with multiple lenders. Ms. Lopez, auto refinancing involves specialized underwriting procedures that require coordination with multiple lenders to secure the best rates. Davis insisted with apparent refinancing complexity and multi-lender coordination. The processing fee covers the administrative costs of reviewing your application with multiple refinancing lenders and ensures that you receive the lowest possible rate, through our lender network. Davis also claimed that the processing fee was refundable if Jennifer didn't receive the promised rate reduction and that most borrowers saved thousands of dollars despite the upfront processing cost. Jennifer felt pressured by the promised savings, but decided to research auto refinancing options independently before paying processing fees to any refinancing company. Jennifer contacted her bank and 2 credit unions to inquire about auto refinancing and learned that all 3 institutions offered refinancing without processing fees and could provide rate quotes based on her credit score. Jennifer also researched National Auto Refinance Services online and discovered that the company had numerous complaints from customers who paid processing fees but never received promised refinancing or rate reductions. Jennifer realized that National Auto Refinance Services was using advance fee fraud by collecting processing fees for refinancing services that were either not provided or were available directly from legitimate lenders without fees. Jennifer obtained auto refinancing through her credit union at 6.8% interest without any processing fees, which reduced her monthly payments by $180 and saved her thousands in interest over the loan term. Jennifer reported the refinancing scam to the Federal Trade Commission, the Consumer Financial Protection Bureau, and her state's Attorney General office. She learned that advance fee refinancing scams often target borrowers with higher interest rates by promising dramatic rate reductions. The authorities explained that legitimate auto refinancing is available directly from banks and credit unions without processing fees, and that borrowers should be suspicious of companies requiring upfront payments for refinancing services. Jennifer learned that auto refinancing should be pursued through established financial institutions and that borrowers should compare offers from multiple legitimate lenders before choosing refinancing options. The experience taught Jennifer to research refinancing options through legitimate financial institutions and to be suspicious of companies charging processing fees for services available directly from banks and credit unions. Jennifer now educates other office workers about auto refinancing scams and emphasizes the importance of working directly with banks and credit unions for vehicle refinancing rather than paying companies claiming specialized refinancing services. Robert, a 38-year-old electrician, was selling his truck when he encountered a buyer that would test his knowledge of legitimate vehicle sales and teach him valuable lessons about vehicle purchase fraud targeting private sellers. The buyer offered to pay with a cashier's check for more than the asking price. Robert had listed his work truck for $16,500 on online classified sites and had received several inquiries from potential buyers, but one buyer seemed especially eager and offered to pay his full asking price without negotiating or inspecting the vehicle. The buyer, who identified himself as Mr. Thompson, claimed to be purchasing the truck for his son who was stationed overseas and couldn't inspect the vehicle personally, which explained why he was willing to pay full price without seeing the truck. "Mr. Wilson, I want to purchase your truck for my son who is deployed overseas and needs reliable transportation when he returns," Thompson said with apparent family urgency and military deployment explanation. "I'm willing to pay your full $16,500 asking price, plus an additional $1,200 to cover shipping costs to his military base, so I'll send you a cashier's check for $17,700. Thompson explained that he would arrange for vehicle pickup through a shipping company and that Robert would need to pay the shipping company $1,200 from the excess funds after depositing the cashier's check. "Mr. Wilson, military shipping requires payment to specialized transport companies that handle vehicle delivery to overseas bases," Thompson continued with apparent military logistics knowledge and shipping procedures. "I'll include the shipping costs in my payment to you, and you can pay the transport company when they arrive to pick up the truck for delivery to my son's base." Thompson promised to overnight a cashier's check for $17,700 and requested that Robert hold the truck until the check arrived, and he could arrange for pickup by the military transport company. Robert was pleased to receive full asking price without negotiation, but was suspicious about the overpayment arrangement and the buyer's willingness to purchase without inspecting the vehicle. "I'm willing to sell the truck, but I don't understand why you're sending extra money for shipping costs instead of paying the transport company directly," Robert explained to Thompson. "Can you have the shipping company contact me directly to arrange pickup and payment?" Thompson became insistent when Robert questioned the payment arrangement, claiming that military transport companies required payment from the seller and that the arrangement was standard for overseas military vehicle purchases. Mr. Wilson, military transport regulations require payment from the vehicle seller rather than the purchaser due to security protocols for overseas shipments. Thompson insisted with apparent military procedure knowledge and security requirements. This arrangement is standard for military personnel purchasing vehicles for overseas delivery, and the transport company will provide all necessary documentation when they collect the vehicle. Thompson also claimed that military personnel often had limited access to banking services overseas and that the payment arrangement was the most efficient method for completing vehicle purchases for deployed service members. Robert felt pressured by the military story but decided to research the payment arrangement and verify the legitimacy of the overpayment before agreeing to hold the truck for Thompson. Robert contacted his bank to inquire about cashier's check verification and learned that fraudulent cashier's checks were common in vehicle sales and that he should verify any check with the issuing bank before releasing vehicles. Robert also researched vehicle purchase scams and discovered that overpayment schemes were frequently used to defraud sellers who deposited fake checks and sent money to scammers before checks were discovered to be fraudulent. Robert realized that Thompson was attempting a classic overpayment scam, where the fake cashier's check would initially appear to clear, but would later be discovered as fraudulent after Robert had paid the shipping company and released the vehicle. Robert contacted Thompson to inform him that he would only accept verified payment for the exact asking price, but discovered that Thompson's phone number was disconnected and that his email address was no longer active. Robert reported the vehicle purchase scam to the Federal Trade Commission, the Internet Crime Complaint Center, and the classified website where he had listed his truck. He learned that overpayment scams were common in private vehicle sales. The authorities explained that legitimate vehicle purchases involve exact payment amounts, and that buyers requesting overpayment arrangements are typically attempting fraud schemes targeting unsuspecting sellers. Robert learned that private vehicle sellers should only accept verified payment for exact asking prices and should be suspicious of buyers offering overpayment arrangements or purchasing without vehicle inspection. The experience taught Robert to verify all payment methods before releasing vehicles and to be cautious of buyers who seem too eager or offer unusual payment arrangements for vehicle purchases. Robert now educates other tradespeople about vehicle purchase fraud and emphasizes the importance of accepting only verified payment for exact asking prices when selling vehicles through private sales. Diana, a 27-year-old marketing assistant, was shopping for a used car when she encountered a dealer that would test her knowledge of legitimate warranties and teach her valuable lessons about extended warranty fraud targeting used car buyers. The dealer insisted she needed expensive warranty coverage for her protection. Diana had found a reliable used Honda with 45,000 miles that fit her budget, but during the financing process, the dealer began pressuring her to purchase extended warranty coverage that would add $2,800 to her loan amount. The finance manager, who identified himself as Warranty Specialist Rodriguez, claimed that extended warranties were essential for used vehicles and that Diana would face expensive repair costs without comprehensive coverage. Ms. Chun, used vehicles always require extended warranty protection because manufacturer warranties expire and repair costs can be devastating without coverage, Rodriguez said with apparent warranty expertise and repair cost knowledge. This Honda is reliable, but even reliable vehicles need expensive repairs that can cost $3,000 to $5,000 without warranty protection. Rodriguez explained that the extended warranty would cover all major systems and components for 5 years, and that the monthly payment increase of only $47 was minimal compared to potential repair costs. Ms. Chun, this comprehensive warranty covers engine, transmission, electrical, air conditioning, and all major systems that typically fail in used vehicles. Rodriguez continued with apparent warranty coverage knowledge and system protection expertise. The $47 monthly payment is much less than you'd pay for a single major repair, and the warranty provides complete peace of mind for your vehicle investment. Rodriguez claimed that the warranty was backed by a major insurance company and that Diana could use any ASE-certified mechanic for covered repairs, making the warranty flexible and comprehensive for her protection. Diana was concerned about potential repair costs, but felt that $2,800 seemed expensive for warranty coverage and wanted to research extended warranty options before adding the cost of her loan. "I want to research extended warranty options before deciding," Diana explained to Rodriguez. "Can I purchase the vehicle without the warranty and add coverage later if I decide I want it?" Rodriguez became urgent when Diana suggested delaying the warranty decision, claiming that extended warranties were only available at the time of purchase and that waiting would eliminate her opportunity for coverage. "Ms. Chun, extended warranties must be purchased at the time of vehicle purchase because insurance companies require immediate enrollment before any problems develop," Rodriguez insisted, with apparent insurance requirements and enrollment timing restrictions. "If you wait and purchase the vehicle without warranty coverage, you won't be able to add protection later, and you'll be responsible for all repair costs." Rodriguez also claimed that the warranty price was a special dealer rate that wouldn't be available through independent warranty companies, and that Diana would pay much more for similar coverage outside the dealership. Diana felt pressured by the claims about limited availability, but decided to research extended warranty options independently before making a decision that would add thousands to her vehicle loan. Diana researched the warranty company mentioned by Rodriguez and discovered that the same coverage was available directly from the warranty provider for $1,400, which was $1,400 less than the dealer's price. Diana also learned that many extended warranties had numerous exclusions and limitations that reduced their actual value, and that comprehensive coverage, like Rodriguez described, was often much more limited than advertised. Diana contacted Honda to inquire about manufacturer extended warranty options and learned that Honda offered certified pre-owned warranties that provided better coverage than third-party warranties at lower costs. Diana realized that Rodriguez was inflating warranty costs and misrepresenting coverage limitations to pressure her into purchasing expensive warranty coverage that was available for much less through other sources. Diana purchased the vehicle without the dealer's warranty and later obtained Honda's certified pre-owned extended warranty for $900, which provided better coverage than the dealer's $2,800 option. Diana reported the warranty sales pressure to her state's Motor Vehicle Dealer Regulatory Agency and the Better Business Bureau. She learned that warranty sales pressure was common and that dealers often received substantial commissions for warranty sales. The authorities explained that extended warranties are optional products and that buyers should research warranty options independently rather than accepting dealer recommendations without comparison shopping. Diana learned that used car buyers should research warranty options through multiple sources and should be suspicious of dealers claiming limited-time warranty availability or exclusive pricing. The experience taught Diana to research vehicle protection options independently and to be cautious of dealers using pressure tactics to sell expensive warranty coverage during vehicle purchase negotiations. Diana now educates other young professionals about extended warranty fraud and emphasizes the importance of researching warranty options through multiple sources rather than accepting dealer warranty recommendations without independent comparison. Carlos, a 34-year-old restaurant manager, needed financing for a used truck when he encountered a lender that would test his understanding of legitimate lending terms and teach him valuable lessons about spot delivery fraud targeting buyers with credit challenges. The dealer allowed him to take the vehicle before final loan approval. Carlos had fair credit due to some past financial difficulties and was working with a dealership that claimed to specialize in helping borrowers with credit challenges obtain vehicle financing through their network of specialty lenders. The dealer, Second Chance Auto Sales, showed Carlos a pickup truck priced at $22,000 and immediately began processing financing applications with multiple lenders to find approval for his credit situation. The finance manager, who identified himself as Credit Specialist Johnson, returned after an hour and announced that Carlos had been approved for financing at 18.9% interest with monthly payments of $425 for 72 months. "Mr. Ramirez, congratulations on your approval with premium auto finance at 18.9% interest," Johnson said with apparent financing success and approval celebration. "Your credit situation required specialized underwriting, but we found a lender willing to work with you, and you can take your truck home today." Johnson explained that the paperwork was being finalized with the lender and that Carlos could take immediate possession of the truck while the final documents were being processed and signed by the lender's underwriting department. Mr. Ramirez, spot delivery allows approved buyers to take immediate possession while final paperwork is being completed. Johnson continued with apparent delivery procedure knowledge and immediate possession benefits. This arrangement lets you drive your truck home today instead of waiting for all the paperwork to be finalized, which can take several days. Carlos signed the financing documents and drove the truck home, pleased to have obtained financing despite his credit challenges and grateful for the immediate delivery arrangement that allowed him to start using the vehicle right away. However, 4 days later, Johnson called Carlos and informed him that the original financing had fallen through and that Carlos needed to return to the dealership to sign new loan documents with different terms. Mr. Ramirez, Premium Auto Finance had to decline your application after final underwriting review, but we found alternative financing with specialty credit solutions at 24.9% interest. Johnson explained with apparent lender change necessity and alternative approval benefits. Your new monthly payment will be $485. But this is the only financing available for your credit situation. Johnson claimed that Carlos had no choice but to accept the new financing terms or return the truck immediately, since the original financing had been declined and no other lenders were willing to approve his application. Carlos was frustrated by the change in terms, but felt trapped since he had already been using the truck for work and had grown dependent on the vehicle for his restaurant management responsibilities. I don't understand how the financing can change after I already signed documents and took possession of the truck, Carlos explained to Johnson. Can I keep the original financing terms that we agreed to when I purchased the vehicle? Johnson became insistent when Carlos questioned the financing change, claiming that spot delivery arrangements always involve the risk of financing changes and that Carlos had agreed to accept alternative terms if the original financing was declined. Mr. Ramirez, spot delivery contracts clearly state that financing is subject to final lender approval and that buyers must accept alternative terms or return vehicles if original financing is declined. Johnson insisted with apparent contract terms knowledge and delivery agreement conditions. You signed documents acknowledging that financing terms could change based on final underwriting decisions. Johnson also claimed that returning the truck would result in mileage and wear charges, and that accepting the new financing was Carlos's best option for maintaining vehicle possession. Carlos felt pressured by the claims about return charges, but decided to research spot delivery practices and his rights as a buyer before accepting the higher financing terms. Carlos contacted a consumer attorney who specialized in auto fraud and learned that spot delivery schemes often involve dealers allowing buyers to take vehicles before securing actual financing, then pressuring buyers to accept worse terms. Carlos also learned that he had the right to return the vehicle without additional charges if the original financing terms couldn't be honored, and that dealers couldn't force buyers to accept alternative financing arrangements. Carlos realized that Second Chance Auto Sales was using spot delivery fraud to pressure him into accepting higher interest rates and payments than originally agreed upon. Carlos returned the truck to the dealership and demanded return of his down payment without mileage or wear charges, citing his rights under spot delivery regulations and the dealer's failure to secure the original financing terms. Carlos reported the spot delivery fraud to his state's Motor Vehicle Dealer Regulatory Agency and the Consumer Financial Protection Bureau. He learned that spot delivery schemes were common among dealers targeting buyers with credit challenges. The authorities explained that legitimate vehicle financing involves confirmed approval before delivery and that buyers should be suspicious of dealers offering immediate possession before final loan approval. Carlos learned that buyers should insist on confirmed financing before taking vehicle possession and should be cautious of dealers claiming specialty lending expertise while using spot delivery arrangements. The experience taught Carlos to verify loan approval confirmation before accepting vehicle delivery and to understand his rights regarding financing changes in spot delivery situations. Carlos now educates other restaurant workers about spot delivery fraud and emphasizes the importance of confirmed financing approval before taking possession of vehicles from dealers claiming specialty lending services. Patricia, a 41-year-old nurse, was trading in her vehicle when she encountered a dealer that would test her knowledge of legitimate trade valuations and teach her valuable lessons about trade-in fraud targeting customers upgrading their vehicles. The dealer significantly undervalued her trade-in while inflating the new vehicle price. Patricia owned a well-maintained SUV with 72,000 miles that she wanted to trade toward a newer model, and she had researched her vehicle's value through multiple sources, showing it was worth approximately $14,500 in trade. The dealer, Premier Auto Exchange, showed Patricia a newer SUV priced at $28,900 and immediately offered to appraise her trade-in vehicle to determine her upgrade costs and financing needs. The sales manager, who identified himself as Trade Specialist Williams, returned from appraising Patricia's SUV and offered $9,500 for her trade-in, which was $5,000 less than the values Patricia had researched. Ms. Johnson, your SUV has some condition issues and higher mileage that affect its trade value, Williams said with apparent appraisal expertise and condition assessment knowledge. The current market for older SUVs is soft, and $9,500 is a fair trade value considering the vehicle's age and the reconditioning costs we'll need to invest. Williams explained that trade-in values were always lower than retail values because dealers had to invest in reconditioning and advertising costs, and that Patricia's SUV would require significant investment to prepare for resale. Ms. Johnson, trade-in appraisals consider reconditioning costs, detailing, mechanical inspection, and advertising expenses that dealers must invest to resell vehicles. Williams continued with apparent dealer cost knowledge and resale investment requirements. Your SUV will need approximately $2,000 in reconditioning before we can retail it, which affects the trade value we can offer. Williams offered to process Patricia's upgrade with the $9,500 trade value, resulting in a balance of $19,400 that could be financed through the dealership's preferred lenders at competitive interest rates. Patricia was disappointed by the low trade valuation but was pressured by Williams's claims about market conditions and reconditioning costs that seemed to justify the lower value. The trade value seems low compared to the research I've done, Patricia explained to Williams. Can you provide details about the specific condition issues that are affecting my vehicle's appraisal value? Williams became evasive when Patricia requested specific condition details, claiming that comprehensive appraisals involved multiple factors and that his assessment was based on current market conditions and dealer experience. Ms. Johnson, vehicle appraisals involve complex market analysis and condition assessment that considers factors beyond basic online value guides. Williams insisted with apparent appraisal complexity and market expertise. Our appraisers have extensive experience with current market conditions and resale costs that affect trade values in ways that online guides don't reflect. Williams also claimed that Patricia could shop her trade elsewhere, but that most dealers would offer similar values, and that Premier Auto Exchange was providing a fair assessment based on current market realities. Patricia felt pressured by Williams's market claims, but decided to get independent appraisals of her vehicle before accepting the low trade value and proceeding with the upgrade. Patricia visited 2 other dealerships and obtained trade appraisals of $13,800 and $14,200, which were significantly higher than Premier Auto Exchange's $9,500 offer and consistent with her independent research. Patricia also discovered that the newer SUV Williams showed her was priced $2,400 above market value based on comparable vehicles at other dealerships, meaning she was being overcharged on both sides of the transaction. Patricia realized that Premier Auto Exchange was using trade-in fraud by deliberately undervaluing her vehicle while overpricing their inventory to maximize profit margins at her expense. Patricia returned to Premier Auto Exchange with competing appraisals and demanded a fair trade value. But Williams claimed that other dealers were offering unrealistic values that they wouldn't honor during actual transactions. Patricia reported the trade-in fraud to her state's Motor Vehicle Dealer Regulatory Agency and the Better Business Bureau. She learned that trade-in manipulation was common among dealers seeking to maximize transaction profits. The authorities explained that legitimate trade valuations should be consistent with market values and that buyers should obtain multiple appraisals before accepting trade-in offers that seem significantly below researched values. Patricia completed her vehicle upgrade at a different dealership that offered $14,000 for her trade-in and priced their inventory at fair market values. saving her approximately $6,900 compared to Premier Auto Exchange. The experience taught Patricia to research trade values independently and obtain multiple appraisals before accepting dealer trade-in offers that seem inconsistent with market research. Patricia now educates other nurses about trade-in fraud and emphasizes the importance of researching vehicle values and obtaining competing appraisals before accepting dealer trade-in valuations that seem unfairly low. Kevin, a 30-year-old software developer, was purchasing his first luxury vehicle when he encountered a dealer that would test his knowledge of legitimate documentation and teach him valuable lessons about odometer fraud targeting buyers of premium used vehicles. The dealer was selling a low-mileage luxury car with suspicious documentation. Kevin had been saving for a luxury sedan and found what appeared to be an excellent deal on a 3-year-old BMW with only 28,000 miles, which seemed unusually low for a vehicle of that age, but created an attractive purchasing opportunity. The dealer, Luxury Motors Outlet, specialized in premium used vehicles and claimed that the BMW had been owned by an elderly customer who rarely drove and had maintained the vehicle in excellent condition with low annual mileage. The sales consultant, who identified himself as Premium Vehicle Specialist Davis, showed Kevin the BMW and emphasized the exceptional value represented by the low-mileage luxury vehicle at a competitive price point. Mr. Thompson, this BMW represents exceptional value because the previous owner was retired and only drove locally, resulting in unusually low mileage for a luxury vehicle of this caliber, Davis said with apparent vehicle history knowledge and mileage explanation expertise. Low-mileage luxury vehicles like this are rare finds that provide premium features with minimal wear and extended remaining life. Davis provided maintenance records showing regular service intervals and claimed that the vehicle had been pampered by its previous owner who understood the importance of proper luxury vehicle maintenance and care. Mr. Thompson, the maintenance records show that this BMW received premium care from authorized dealers with genuine parts and factory-trained technicians. Davis continued with apparent maintenance quality knowledge and luxury vehicle care expertise. This level of care ensures that you're getting a vehicle that will provide years of reliable luxury transportation with minimal maintenance needs. Kevin was impressed by the low mileage and maintenance records, but noticed some discrepancies in the vehicle's condition that seemed inconsistent with such low usage, including excessive wear on the brake pedal and steering wheel. The mileage seems low, but there's significant wear on the pedals and steering wheel that doesn't match 28,000 miles, Kevin explained to Davis. Can you explain why these components show more wear than I would expect for such low mileage? Davis became dismissive when Kevin questioned the wear patterns, claiming that luxury vehicles sometimes showed wear differently and that premium materials could show use patterns that didn't correlate directly with mileage. Mr. Thompson, luxury vehicle materials can show wear patterns that differ from economy vehicles, and factors like driving style and environmental conditions can affect component wear independently of mileage, Davis insisted with apparent luxury vehicle knowledge and wear pattern expertise. This BMW's condition is consistent with low-mileage luxury vehicles that have been driven in urban environments with premium materials that show use differently. Davis also claimed that Kevin was being overly cautious and that the vehicle's documentation and maintenance records clearly supported the stated mileage and condition claims. Kevin felt uncomfortable with Davis's explanations and decided to have the vehicle independently inspected before making a purchase decision on such a significant investment. Kevin hired a qualified mechanic to inspect the BMW and learned that multiple components showed wear patterns consistent with 80,000 to 90,000 miles rather than the stated 28,000 miles, indicating probable odometer tampering. The mechanic also discovered evidence that the odometer had been disconnected and reconnected, and that several maintenance stickers showed mileage numbers that were inconsistent with the current odometer reading, confirming odometer fraud. Kevin realized that Luxury Motors Outlet was committing odometer fraud by rolling back mileage to increase the vehicle's value and deceive buyers about the car's actual usage and condition. Kevin confronted Davis with the inspection results, but Davis denied any knowledge of odometer tampering and claimed that the mechanic was mistaken about the wear patterns and maintenance inconsistencies. Kevin reported the odometer fraud to his state's Motor Vehicle Dealer Regulatory Agency, the National Highway Traffic Safety Administration, and local law enforcement. He learned that odometer fraud was a federal crime that significantly affected vehicle values and safety. The authorities explained that odometer fraud often targets luxury vehicles because mileage reduction can increase values by thousands of dollars, and that buyers should always have high-value vehicles independently inspected. Kevin purchased a different luxury vehicle from a reputable dealer with verified mileage and complete documentation, avoiding the potential safety and financial risks associated with the fraudulent BMW. The experience taught Kevin to have expensive vehicles independently inspected and to be suspicious of luxury cars with unusually low mileage that show where patterns inconsistent with stated usage. Kevin now educates other software professionals about odometer fraud and emphasizes the importance of professional vehicle inspection when purchasing high-value used vehicles from dealers making exceptional mileage claims. Angela, a 26-year-old physical therapist, was financing a vehicle when she encountered a dealer that would test her understanding of legitimate insurance requirements and teach her valuable lessons about forced insurance fraud targeting young buyers. The dealer insisted she purchase expensive insurance through their preferred provider. Angela had arranged her own auto insurance through her family's agent at competitive rates. But during the financing process, the dealer claimed that their lender required insurance purchased through specific providers with minimum coverage levels. The finance manager, who identified himself as Insurance Coordinator Martinez, insisted that Angela's existing insurance didn't meet the lender's requirements and that she needed to purchase coverage through their approved insurance agency. Ms. Taylor, your current insurance doesn't meet our lender's requirements for comprehensive coverage and gap protection, Martinez said with apparent lender requirements knowledge and insurance specification expertise. Our approved insurance provider offers the exact coverage required by the financing agreement, and we can add the premium to your monthly payment for convenience. Martinez explained that the required insurance would cost $185 per month compared to Angela's current $95 monthly premium, but claimed that the additional cost was necessary to meet financing requirements and protect the lender's investment. Ms. Taylor, financing agreements require comprehensive coverage with specific deductibles and gap insurance that protects both you and the lender in case of total loss. Martinez continued with apparent financing protection knowledge and coverage requirement expertise. Our approved insurance provides exactly the coverage specified in your loan documents and ensures that your financing remains compliant with lender requirements. Martinez prepared financing documents showing the higher insurance costs included in Angela's monthly payments and claimed that using alternative insurance could void her loan agreement and result in immediate payment demands. Angela was concerned about doubling her insurance costs, but felt pressured by Martinez's claims about lender requirements and potential loan violations if she maintained her existing coverage. I want to verify these insurance requirements with the lender before changing my coverage, Angela explained to Martinez. Can you provide me with written documentation of the specific insurance requirements that my current policy doesn't meet? Martinez became evasive when Angela requested written requirements, claiming that insurance specifications were included in the financing contract and that questioning the requirements could delay loan approval. Ms. Taylor, the insurance requirements are clearly specified in your loan documents, and our insurance coordinator ensures compliance with all lender specifications, Martinez insisted with apparent compliance expertise and documentation authority. Delaying insurance approval could affect your loan processing and prevent you from completing your vehicle purchase today. Martinez also claimed that the preferred insurance provider offered superior coverage and service compared to standard insurance companies, and that the higher cost reflected better protection and convenience. Angela felt pressured by the claims about loan compliance, but decided to contact the lender directly to verify insurance requirements before accepting expensive coverage through the dealer's preferred provider. Angela called the financing company and learned that they only required standard comprehensive and collision coverage with reasonable deductibles, and that her existing insurance met all loan requirements. The lender representative also explained that borrowers could use any licensed insurance provider and that dealers couldn't require specific insurance companies or force borrowers to purchase coverage through preferred providers. Angela realized that Martinez was attempting forced insurance fraud by claiming false lender requirements to pressure her into purchasing expensive insurance that generated commissions for the dealership. Angela returned to the dealership with confirmation from the lender about insurance requirements and completed her purchase using her existing insurance coverage, saving $90 per month compared to the dealer's preferred insurance. Angela reported the forced insurance fraud to her state's Insurance Commission and Motor Vehicle Dealer Regulatory Agency. She learned that forced insurance schemes were common among dealers seeking additional profit from insurance commissions. The authorities explained that legitimate financing only requires adequate coverage levels and that dealers cannot force borrowers to purchase insurance through specific providers or claim exclusive lender requirements. Angela learned that vehicle buyers should verify insurance requirements directly with lenders and should be suspicious of dealers claiming specific insurance provider requirements that seem inconsistent with standard financing practices. The experience taught Angela to verify lender requirements independently and to be cautious of dealers claiming exclusive insurance requirements that generate additional costs and dealer commissions. Angela now educates other healthcare workers about forced insurance fraud and emphasizes the importance of verifying insurance requirements through lenders rather than accepting dealer claims about preferred provider requirements. Stephen, a 33-year-old accountant, was purchasing a certified pre-owned vehicle when he encountered a dealer that would test his knowledge of legitimate certification and teach him valuable lessons about false certification fraud targeting buyers seeking reliability assurance. The dealer was selling vehicles with fake certification documentation. Stephen wanted the reliability assurance of a certified pre-owned vehicle and was willing to pay premium prices for manufacturer-certified vehicles that included extended warranties and quality guarantees. The dealer, Certified Auto Warehouse, specialized in certified pre-owned vehicles and displayed numerous manufacturer certification logos and quality assurance certifications throughout their showroom and advertising materials. The sales representative, who identified himself as Certification Specialist Wilson, showed Stephen a Honda with Honda's certified pre-owned documentation and emphasized the quality assurance and warranty benefits included with certified vehicles. Mr. Robinson, this Honda certified pre-owned vehicle has undergone Honda's rigorous 182-point inspection and includes a comprehensive warranty that provides the same reliability assurance as a new vehicle, Wilson said with apparent certification expertise and quality assurance knowledge. Certified vehicles represent the highest quality used vehicles available because they meet manufacturer standards for condition and reliability. Wilson provided certification paperwork showing that the vehicle had passed Honda's inspection process and included extended warranty coverage, roadside assistance, and other certified pre-owned benefits that justified the premium pricing. Mr. Robinson, Honda's certified pre-owned vehicles include a 7-year per 100,000-mile powertrain warranty and comprehensive coverage that protects your investment with manufacturer-backed reliability assurance. Wilson continued with apparent warranty knowledge and certification benefits expertise. This certification provides peace of mind that you're purchasing a vehicle that meets Honda's strict quality standards. Stephen was impressed by the certification benefits and was willing to pay the $2,500 premium for certified pre-owned status, but wanted to verify the certification authenticity before completing his purchase. I want to verify this certification with Honda before finalizing my purchase, Stephen explained to Wilson. Can you provide me with the certification number that I can check through Honda's certified pre-owned verification system? Wilson became evasive when Stephen requested certification verification, claiming that the paperwork provided all necessary certification information and that additional verification wasn't necessary for legitimate certified vehicles. Mr. Robinson, the certification paperwork includes all the verification information you need, and Honda's certification process ensures that these vehicles meet all quality standards. Wilson insisted with apparent certification validity and documentation completeness. The certification process is thorough and reliable, so additional verification steps aren't necessary for properly certified vehicles. Wilson also claimed that Honda's verification system was often slow and that delays could affect Stephen's ability to complete his purchase before other buyers became interested in the certified vehicle. Stephen felt pressured by Wilson's claims about other buyers, but decided to verify the certification independently before paying premium pricing for certified pre-owned benefits. Stephen contacted Honda's certified pre-owned customer service and learned that the vehicle wasn't actually certified, and that the certification paperwork was fraudulent documentation created to justify premium pricing. Honda's representative explained that legitimate certified pre-owned vehicles were listed in their database, and that dealers using false certification documentation were committing fraud that violated manufacturer agreements. Stephen realized that Certified Auto Warehouse was using false certification fraud to charge premium prices for regular used vehicles by creating fake manufacturer certification documentation. Stephen confronted Wilson with Honda's verification results, but Wilson claimed there must be a database error and that the vehicle was legitimately certified despite Honda's contrary information. Stephen reported the false certification fraud to Honda's corporate fraud department, his state's motor vehicle dealer regulatory agency, and the Better Business Bureau. He learned that fake certification schemes were used to justify premium pricing for ordinary used vehicles. The authorities explained that legitimate manufacturer certification can always be verified through official manufacturer databases and that buyers should confirm certification status before paying premiums for certified pre-owned vehicles. Stephen purchased a genuinely certified pre-owned vehicle from an authorized Honda dealer at similar pricing, but with authentic certification benefits and manufacturer-backed warranties. The experience taught Stephen to verify manufacturer certification through official channels and to be suspicious of dealers claiming certification benefits without providing verifiable certification documentation. Stephen now educates other professionals about false certification fraud and emphasizes the importance of verifying manufacturer certification through official sources before paying premium prices for claimed certified pre-owned status. Michelle, a 39-year-old social worker, was financing a family vehicle when she encountered a lender that would test her understanding of legitimate loan terms and teach her valuable lessons about payment packing fraud targeting borrowers focused on monthly payments. The lender was inflating her loan with unnecessary products and services. Michelle needed a reliable family vehicle and was primarily focused on monthly payment affordability rather than total loan costs, making her vulnerable to payment manipulation tactics used by unscrupulous lenders. The finance manager, who identified himself as Payment Specialist Adams, presented financing options that emphasized low monthly payments while including numerous additional products that significantly increased the total loan amount. Ms. Davis, we can get your monthly payment down to $385 by structuring your loan with extended terms and including essential protection products that every family vehicle needs, Adams said with apparent payment optimization knowledge and family protection expertise. This payment structure provides maximum affordability while ensuring that your family investment is properly protected. Adams included extended warranties, gap insurance, paint protection, fabric protection, and vehicle service contracts in the financing package, claiming that these products were essential for family vehicle ownership and protection. Ms. Davis, family vehicles require comprehensive protection because unexpected repair costs can be devastating to household budgets. Adams continued with apparent family budget knowledge and protection necessity expertise. These protection products ensure that your vehicle investment remains reliable and that your family isn't exposed to unexpected repair and maintenance costs. The financing documents showed a total loan amount of $34,800 for a vehicle priced at $26,500, with the additional $8,300 representing various protection products and services that Adams claimed were necessary for responsible family vehicle ownership. Michelle was pleased with the monthly payment, but was concerned about the significant difference between the vehicle price and total loan amount, which seemed excessive even accounting for taxes and fees. The total loan amount seems much higher than the vehicle price, Michelle explained to Adams. Can you provide a breakdown of all the additional costs and products that are included in the financing package? Adams became evasive when Michelle requested detailed breakdowns, claiming that the protection products were packaged together for convenience and that itemizing costs would complicate the financing approval process. Ms. Davis, the protection package is bundled for administrative efficiency and maximum value, and breaking down individual costs could affect your loan approval and payment structure, Adams insisted with apparent packaging benefits and approval process knowledge. The total package provides comprehensive protection at a discounted rate compared to purchasing individual products separately. Adams also claimed that removing protection products would increase Michelle's monthly payment and that the current package represented the best value for comprehensive family vehicle protection. Michelle felt pressured by Adams's claims about payment increases, but decided to research the included products and their actual necessity before agreeing to finance thousands of dollars in additional protection services. Michelle researched each protection product and discovered that most were available independently at much lower costs, and that several products duplicated coverage she already had through her existing insurance and warranty protection. Michelle also learned that extended financing terms with additional products often resulted in borrowers paying significantly more in total costs despite lower monthly payments, making the payment focus misleading for total affordability. Michelle realized that Adams was using payment packing fraud to inflate her loan with unnecessary products while focusing her attention on monthly payment amounts rather than total financing costs. Michelle returned to the dealership and requested financing without the protection package, reducing her total loan amount by $8,300 and saving thousands in interest over the loan term despite slightly higher monthly payments. Michelle reported the payment packing fraud to the Consumer Financial Protection Bureau and her state's motor vehicle dealer regulatory agency. She learned that payment packing schemes often targeted borrowers who focused on monthly payments rather than total costs. The authorities explained that legitimate vehicle financing involves transparent disclosure of all costs and products, and that borrowers should focus on total loan costs rather than just monthly payment amounts. Michelle learned that vehicle buyers should carefully review all financing products and focus on total loan costs rather than accepting financing packages based solely on monthly payment convenience. The experience taught Michelle to analyze total financing costs and research protection products independently rather than accepting bundled packages that inflate loan amounts while promising payment affordability. Michelle now educates other social workers about payment packing fraud and emphasizes the importance of understanding total loan costs and researching protection products before accepting financing packages focused primarily on monthly payment amounts.